Okay. Mike, we see this so much, and we actually had, a situation a few weeks ago where a radio caller, they called into us because they wanted a second opinion. They listened to
Hmm.
the show and they thought, maybe I'll get a second opinion. And they were talking to their current advisor and they had rolled over a 401k, and they came in and we were looking at the numbers and they just weren't adding up. And what we noticed was there was $1 million of NUA that was rolled over and could have been taxed at capital gains rate. So instead of saving, on the tax side and paying 15% on $1 million, they're actually going to end up paying, over 30% on that $1 million. So again, it's a situation where the numbers just didn't add up. And, if they had, gotten a second opinion, or if their current advisor was thinking about the tax side of things and knew the tax law, then that could have been avoided.
And Lawrence, I think it's important for people to truly understand the tax implications of their 401k. And Michael, you alluded to this when you said people save too much. I'm not of the mindset that people ever save too much. I'm of the mindset that people save too much money in the wrong tax buckets. Right.
Okay.
I mean, because I don't think anybody ever gets to retirement. I mean, unless you did nothing and you lived as a pauper through your whole, working years, and you did absolutely nothing to enjoy life, and chose not to spend money, and now you're at retirement and now you're going to spend all this money. I think that's the exception to the rule of I save too much. I think most people have saved too much money in the wrong type of tax bucket. And Lawrence kind of alluded to that, when you have money in a 401k and you've managed to buy company stock, and that's what NUA is all about, company stock, you're allowed to actually withdraw that company stock and pay capital gains on all the gains in that stock. So in the situation that Lawrence was talking about with that $1 million client, they literally had $150,000 worth of tax basis. And I know that sounds crazy because in our mind's eye, 401k doesn't really have a tax basis, but there's this little crazy law. Remember, we're talking about the complexities of laws, the tax laws. There's this little crazy law that says if you have NUA, you can take it out, you pay tax on the basis. So in this situation, he could have paid tax on the 150,000, but the other 850,000 would have been taxed at capital gains rates for him, 15%. And quite frankly, when we were running the numbers, he could have got all that 401k money out, and he wasn't going to take it out all at once, meaning he wasn't going to spend the rollover all at once, but we could have got all that money out at the 0% tax bracket. And quite frankly, anytime I get somebody in the 0% tax bracket and we do this little happy dance, our feet are a little pattering, we get very excited because to be able to look somebody in the face and say, look, I know your advice giver told you, or I know your CPA told you, you're going to have to pay tax during lifetime. And I know somebody told you, yes, Social Security is taxable. It's just the way it is. No, that is absolutely false. That is absolutely incorrect. It's because they chose not to understand the advice they were given. It's because they chose not to give you the proper advice. It's because they chose not to get educated. It's because they chose to work for somebody else instead of working for you. A true advice giver works for you. They don't work for somebody else. They work for you. They have your best interest in mind. And you know what? The 0% tax bracket should be in your best interest. That is, to me, that's what everybody should strive for. I don't care how complicated it is. I don't care how much money you've saved. You should always be striving to pay the least amount of taxes legally possible. And zero includes that legally possible amount.